Buy a term plan, invest the rest. Heard of this phrase a lot. Even though I now know how to invest my own money, manage it well enough, I still hold on to my whole life insurance policy that I bought 4 years ago, fresh out of university at my first full-time job. Do I regret it or not? Watch on today's video as I share with you the thought process behind it, and hopefully by the end, you'll be able to decide for yourself whether a whole life or a term life will suit you. Let's dive straight into today's video. Let's go. Life insurance isn't difficult to understand. It's like a plain pizza dough, and it only gets complicated when you choose what kind of toppings you'd like to have. Stuff like how much early critical illness or critical illness coverage should you be adding into the main policy, how much you want to be covered for, and how long should you be paying premiums for. You can decide whether do you want to pay monthly, quarterly, semi-annually, or even annual premiums as well. Anyways, life insurance typically covers you for death and total and permanent disability. In the event that you pass on, this amount goes to your loved ones, and in the event of total and permanent disability, this amount will be given to you to tide you through the remaining years. Critical illness in a life insurance policy is optional. There are insurance plans that cover you just for critical illness alone, and you can choose to separate the two out. You don't necessarily have to add in CI into a term life or a whole life. When exactly do you need life insurance protection? Some examples: if you are the sole breadwinner of the family, you have dependents to support, example your child, for X number of years before they go independent in their 20s, or your parents rely on you for allowance to meet their basic necessities because they're not working anymore, or you have outstanding mortgage that you have with your partner, and this life insurance protection will give your other half a payout in the event that something does happen on your life and they aren't left to shoulder the outstanding loan amount on their own. It can be a relief having this payout in their pockets. This table that I'm going to show on screen right now is the main differences between a whole life and a term life. As the name suggests, a whole life policy covers you for life. Term life only covers you to X age of your choice. This is decided by you. Some people cover until 65, 70, 75, but these days, as our mortality age increases, you should be extending your life insurance coverage as well. But insurance is very subjective. It depends on what you want. The elements in a whole life insurance plan comprises of not only insurance, but there is an investment portion. Term life is an insurance only, so whatever that you're paying, there's no surrender value. It is an expense, and that is why it is cheaper than buying a whole life policy. One more thing to add: life insurance, critical illness protection, these insurance premiums are locked in at what your current age is. So when I bought my plan at 24 years old, the premiums I've locked in at age 24. If I'm buying it today, I will be locking it at age 28. So the older you are, premiums are going to be more expensive. Additionally, insurers only protect you at what your current state of health is right now. So if you're healthy, get insurance protection. Let's say down the road you develop any conditions before you get yourself insured, you might not be able to get insurance anymore. Otherwise, you're going to be paying much more in premiums. So make sure you get your insurance protection while you're still healthy and while you're still young. So some of you might be asking me, why not surrender my whole life policy, buy a term plan right now since it's cheaper, I now know how to invest my own money, manage my money well, etc. The only reason why I'm still maintaining this policy is because of this. Take a look at this guaranteed surrender value table. At age 59, I would have gotten more than my total premiums paid to date. So if, let's say, down the road at age 60, 70, 75, I need this amount of money. For some reason, I didn't manage my money well, I don't have enough for my retirement, and I still am single, do not have anyone relying on me, I can just give up this policy, get the guaranteed surrender value, plus whatever bonuses that have been declared to my policy over the years. So this is the only reason why I'm still continuing to pay premiums up until age 50, and beyond that, I do not have to pay anymore, but I'm still getting covered for death, TPD, critical illness, and early critical illness. Thank God I didn't cancel this plan when my other agent suggested back then. This is why I always say get some form of understanding before you actually jump into investing into something or buying into something. Not everyone will have your best interests at heart. So for those of you who hold a whole life insurance policy, what should you be doing? Don't just look at what I'm doing alone and decide to cancel or surrender it. In no way am I advising you or suggesting that you should even do that. I would say review it with your advisor. Hopefully they're good to be able to look at it in a neutral perspective, suggest what is best for you. Look at all of it in totality, do a before and after review. And this is also why I say who you choose as your financial consultant matters as well. Hopefully they have your best interest at heart. If you don't have life insurance coverage, some questions to ask yourself whether should you be getting or not that covers you for death and total permanent disability is, do you want to leave an amount behind for your loved ones? If you have a mortgage that you're still paying for, you can also use a term life coverage to match that loan repayment term, and in the event that you do pass away, this amount can be given to your loved ones to help shoulder the burden of the mortgage repayment. My whole life policy provides a basic coverage of $100,000, and in the event that I pass away, my loved ones will get this payout, or when I have fulfilled the conditions of being total and permanently disabled, this payout will be made available to me and my plan will be over. I also have a critical illness or early critical illness component in this whole life policy that will pay me $50,000 if I get either a late stage or early stage critical illness, like cancer for example. This $50,000 payout comes from the total $100,000 covered. I know it can be a little bit confusing, but stay with me. Say I did a body checkup and I was diagnosed with late stage cancer. My whole life plan will pay me $50,000 and the policy will continue to cover me for life, but be left with only $50,000 to claim for death or total permanent disability. Another example, if I passed away, this plan will pay me $100,000 and it will end. This is the basics of my whole life policy, but I do also have a multiplier that adds on to this policy till the age of 70. My total coverage gets multiplied by 2 respectively until 70 years old. If you're confused by the time I've explained how my whole life insurance plan works, do not worry, it is confusing, I do admit. That is why your financial planner is supposed to go through with you and explain to you until you understand what you are buying. This is my whole life plan. Every single policy varies and what I have might be different from your policy. So make sure you do your readings of the policy document. Otherwise, ask your financial planner. That's all I have for today's video. If you want to find out about my own insurance review done recently, it's documented in this video, which I'll link up above and down in the description box below. If you want to reach me, my Instagram DMs are always open. I'll see you guys in my next video. Have a great week ahead. Bye bye.